welcome back to BLOCKTV. It's time now for Links in the Chain. Now, when it comes to crypto investments, we here at BLOCKTV talk ad nauseum about the question of whether or not institutional investors are actually making their way into the crypto space. But while we're busy speculating away, today I am joined by a man who works where the rubber meets the road. Of course, I'm talking about Mark Yusko, founder and CEO of Morgan Creek Capital Management and Morgan Creek Digital, whose second crypto fund launched back in June and has completed its first tranche, raising a whopping $61 million, with plans to on track to raise a total of $250 million for the fund in total. Mark, firstly, thanks so much for joining us.
No, thanks for having me. Always great to be together.
All right, so Mark, starting off, I want to talk about that impressive investing round that you guys have seen so far. That's $61 million raised already in the first tranche, on track for your $250 million. Talk us through a little bit about the sort of the idea behind this second fund, how that investing round is sort of going, and your projections for the future.
Yeah, so we launched Morgan Creek Digital about 18 months ago. Went out to raise a small fund to focus on building out infrastructure around blockchain and crypto. We're surprised at the positive response, and in fact, really surprised in a positive way by the response from the institutional community. We thought that, like most early stage opportunities, we'd see a lot more interest from individuals, family offices. But we were fortunate to have 6 institutions join in our first fund and exceeded our fundraising benchmark for that first fund nicely. And it was really led by 2 large pension funds out of the DC area over here in the States. And what's been really exciting is we put that capital to work over the past year, and we went out to raise fund 2 with a much bigger target, $250 million. And the great thing is all 6 of our institutional investors increased their exposure. So our 2 pension funds, our 2 leads, went from 21 million in fund 1 to 50 million in fund 2. One of our healthcare institutions went from $500,000 in the first fund to 5 million in the second fund. So we're seeing a growing interest level from those institutions. And really it's about investing in the infrastructure, the picks and shovels and the pipes to help build out this evolving ecosystem around, again, blockchain technology broadly and crypto specifically.
So I want to address that point you raised there, talking about the funds that have invested and have increased their investment. Because, of course, it's a fantastic thing to see those institutions that dip their toes into crypto wanting to come back and double down and get a little bit more. But I suppose on the flip side of that, Mark, there's always the question of getting those other institutions that aren't yet in the game off zero, getting those new players into the sphere. And again, as we say, there's often speculation rampant around the crypto sphere. Is this or that effort going to be the new thing that brings those new players into the market? We had the launch of the backed futures exchange was going to be this big catalyst for bringing institutions on board, and it had a little bit of a tepid launch, even though it is picking up now. But do you see these new institutions coming in as well, or is it more those that have already dipped their toes willing to come back for a second round?
Really good insight and great question. If you think back to 2 years ago when we first started socializing this idea with our clients, particularly institutional clients, there was not much interest or really much response. And I joke that back 2 years ago, 80–90% of the people we would call to ask about the idea were like, yeah, not really interested in even meeting, let alone talking about it. And the 10 or 20% that we did get a meeting, about 90+% of those after the meeting were like, okay, thanks for the education, but we're really not interested that much. So it was the toe dippers or the toenail dippers, even, not even the full toe, but just the edge of the toenail in those early funds. And whether it was us or A16Z or others, people weren't really putting a large percentage in. Now, in the past year, what we've seen is a lot of those early people who were not even willing to talk are now willing to have a meeting or a second meeting. They're more interested. They're not at a really adopter phase yet. And this is how S curves work, right? You have the innovators, the first couple % of a wave, and then you've got the early adopters, the next kind of 6.5–7%. And it really takes that early majority, those intrepid, courageous people to lead. And we're seeing that leadership in our pensions. We're seeing it in a couple of our foundations and endowments. And what really has to happen now is more education, more opportunities for institutions to feel comfortable that their peers are out there doing this. And also there needs to be some success. I think one of the things that drove the early adoption back at the internet was you saw some success. You saw companies like Yahoo or Google or others start to make traction. And we need some of those analogs out in the marketplace so people can get comfortable that there is a real investment opportunity here.
So, I mean, in talking about this sort of development, this education, and as you mentioned just earlier as well, one key point, particularly of this new fund that you guys are putting forward, is that idea of investing in blockchain infrastructure. It's something both yourself and your partner, Anthony Pompliano, have spoken about considerably when marketing and talking about this particular fund. Companies who said like Bitwise, like BlockFi, some of these companies that are really providing those crypto-based financial services and spreading those on-ramps there for those institutions and larger players that want to get on board. Can you talk us a little bit through that strategy and why you see that as so integral to taking blockchain and cryptocurrencies to the next level?
Yeah, again, another really important question and great insight in that if you think about any technological innovation, and I use the analogy of going all the way back to 1954 with the mainframe, and then 68 with the microchip, and then 82 with the personal computer, 96 with the internet, 2010 with the mobile net, and 2024 with the trust net. So that means we're still 4 years away from really broad adoption of this, blockchain as the driving force or as the operating system for the internet of value or the internet of things. And so in those early adopter days, it's really important to get people excited about how the technology is going to apply to old businesses as well as new businesses. I always talk about if you're a founder and you're applying new technology, there are really two things you can do. You can be a big E entrepreneur and you can invent something new, new service, a new product, or you can be a little E entrepreneur. You can make something old better. And financial services is a type of disruption using blockchain. And we talk about blockchain technology will do to financial services what the internet did to information and e-commerce. And that's where we're seeing the big opportunity. So whether it's BlockFi, which is creating financial services just like a bank would for the fiat system, it's creating financial services, lending and custody and deposit, making interest on your deposits. The same way that you use a financial institution of old, you'll use these new financial institutions for the crypto age or the digital age. And so as we digitize assets, we're going to find opportunities. One of our biggest investments, actually our biggest investment, a company called Figure Technologies, they're basically recreating the asset-backed lending marketplace using a blockchain called Provenance. And so the opportunity there is to disrupt a multi-$100 billion market that has, today uses multi-100-year-old technology, physical paper certificates, electronic QSIPs. By digitizing all of that, we're making an old system, 3-day settlement, very clunky, very inefficient, very costly system. We're taking the settlement down to instantaneous, not we, they. They're cutting the cost. The rating agencies are giving higher ratings because you have more transparency. So that's a great example of taking an old-fashioned financial services business, bringing it into the digital age, and being a great investment opportunity.
And then that conversation around, I guess, the aging infrastructure that exists, particularly in the United States, regarding financial services has become a very salient one in US politics at the moment, driven in large part, I would say, by the conversation that exists around Libra. So I want to sort of bring that into the conversation and ask you, Mark, what sort of role you think Facebook in promoting Libra and now the Libra Association as a whole moving forward has done to push some of this, these issues of digital development, of financial service development and digitization. What sort of role has Libra done to push that forward, and do you see that as a net positive, particularly working in your field where you're attempting to sort of drive that sort of innovation forward?
Yeah, look, I mean, we definitely think that Libra is a net positive, and they've raised the level of conversation about the digitization or bringing us into the digital era. You know, it's very important for people to really understand what blockchain does as triple entry accounting and allowing us to exchange value on a peer-to-peer basis for the first time without that rent-seeking middleman, without that trusted third party. You know, the banking system goes all the way back to the 1400s and the Medicis and the dual entry accounting system. And what that did, it solidified the banking cabal being really in charge of the transfer of value and the safekeeping of value. Now we've got new technology that allows a true peer-to-peer digital age. And what I think Libra does is it lets people understand that, wait, I can convert my fiat asset, my fiat currency, into this digital token, and I can use that in the ecosystem that is the Facebook network, which is 2.4 billion people strong around the world, and we can bring financial services to the unbanked. I mean, one of the great things about Libra is the idea that the people who don't have bank accounts but do have mobile phones, do have Facebook accounts, can suddenly do mobile commerce using Libra token as a medium of exchange. Now, that's still a centralized system, and it has all the negatives of centralized systems, but it has a huge benefit over not having any system at all. You know, it's kind of like what M-Pesa did in Kenya, where people were using cell phone minutes to exchange value. It's just a medium of exchange or a currency. So currencies can be digital currencies, electronic currencies. They can be cryptocurrencies, decentralized currencies like Bitcoin, which I think has other huge advantages. We can talk about that another time. But what Libra is doing is it's bringing that knowledge of this step function from the analog age, the electronic age, to the digital age. And when you think about a network with 2.4 billion people, what that has the potential to impact fiat currencies around the world, it's no surprise that certain governments are less than happy to think about so much of those deposits going out of the traditional financial systems. And I think those traditional financial system institutions like the banks are putting a lot of pressure on Congress and other places to fight back.
And are you concerned, I suppose, and do you agree with Zuckerberg in the sense that you feel that in terms of financial innovation, the US may risk being left behind?
Definitely, 100%. Look, you can fight against technology, and we have lots of examples of that, right? The street sweepers were really unhappy when the horseless carriage was created because they were going to lose their jobs, and they tried to push to get rules passed that would make it hard for the horseless carriage to come in. And then you had all kinds of examples over time of people fighting against technological innovation. And what that does in the long run is it just puts you at a disadvantage as a country. And we were just talking about this morning at our investment committee. One of the things that has made the US so successful over the years is they've had much better policies around an investment culture, an equity culture, and a willingness to back entrepreneurship and allow companies to be formed. And Facebook and Amazon and Microsoft and Google are great examples of that relative to, you look at 10 years ago or 20 years ago, the biggest companies in the world were dominated by the big industrial companies. Today, 5 of the 10 biggest companies in the world are US tech companies. And if we take a different approach and hinder that development as we move toward crypto assets and cryptocurrencies, crypto commodities, crypto equities, crypto bonds, that'll really move the center of the universe toward places that are adopting it, like China. China has said right away, we are going to back a digital renminbi. If they do that, if they become the first global borderless digital currency, what does that do for adoption around the world? Think about countries that have adopted the US dollar instead of their currency in times of stress. Now, if they could buy a digital renminbi or a digital Korean won or whatever, digital ruble, what does that mean for the US position as a hegemonic power? So I think we're at the very nexus of a huge power shift as we go truly global and borderless around the world in the digital age.
And you haven't shied away either from that talk of that change occurring inside sort of inside Wall Street and inside the corporate sector of the United States. I mean, a quick scroll through your Twitter feed, you talk about the dangers of corporate buybacks, the dangers of rampant inflation, stealing from the poor. I mean, there's a sort of a revolutionary element in your sort of vision of what potentially needs to change inside corporate America and the potential power of cryptocurrencies. What drew you to that philosophy, and talk us through it?
No, I couldn't agree more that this is not just a technological evolution, but has the potential to be revolutionary in reversing this 100-year-long slide in wealth and income inequality. We have the greatest wealth and income inequality in the history of the United States. The top 0.1% have the vast majority of assets, top 1%, the very vast majority of assets and wealth. The average person in America couldn't come up with $400 for an emergency, and yet the people at the top, they're talking about soaking the rich with increased taxes. That shows us that there's a problem. And what I do believe is that inflation, right, mandated inflation, that really didn't exist before the central bank was created in 1913, is theft. It's theft from the masses, and it cycles the money up to the top of the food chain, and the oligarchy and the kleptocracy at the top. So do I think that Bitcoin and other digital assets around the world have the ability to allow the average person to store their wealth safe from the whims of the very few at the top? Absolutely. Do I think that you've seen this in places like Argentina or Venezuela, where the dictator playbook is alive and well, or Zimbabwe? You think about it, the people at the top, they have all the assets, they devalue their fiat currencies, they get very, very rich, and the average person gets very, very poor very, very quickly. So this race to the bottom of global currencies really is good for people who own assets, but it's really bad for the average person. So having a differentiated digital, global, borderless store of value, I think, is incredibly important.
So then bringing that conversation back full circle, because we've seen, looking into the short term, we've seen in 2019, we had a good start to the year, but the second half of 2019 has been a little bit rough on crypto markets. We had that amazing day of volatility on around the 25th, 26th, where we saw a surge in Bitcoin of, on the day around 40% and coming back a little bit. But what do you see as the sort of short to medium term future for Bitcoin looking like? Do you think this is the time for Bitcoin to finally surge, to finally go to the moon, as so many in the industry are looking for?
I'm not really a moonshot kind of guy. I'm much more of a slow and steady wins the race kind of guy. The thing I look at with Bitcoin and other digital assets is adoption. And what are the fundamentals telling us about something like Bitcoin? Are more users using it? Are more wallets being created? Are there more owners around the world? Are there more transactions? Are block sizes increasing? Is the hash rate increasing? Are more miners getting involved? All of those things are positive. All those things have been positive really in every single year. We just had the 11th birthday last week of the white paper. We're coming up on the 11th birthday in January of Bitcoin itself. And you go back to that original Genesis block, and what it talked about was this financial crisis and this theft of wealth in bailing out the banks. And since that time, the value of the network, the value of people that have come into Bitcoin has gone up every single year, save one. We had a small drop from 2014 to 15, but the low in every year has been higher. So the total value of the network goes up. And people keep focusing on the price on some date, right? Some date in 2017 as being some fundamental indicator of value. Well, that's not the indicator of value. Price is a liar. The price of, at any minute is just whatever some small amount will transfer between two people. The value is the overall value of the network. And that's actually pretty easy to track using Metcalfe's law or stock to flow and other measures. And so all of those indicators are telling us that adoption is increasing, value is increasing, and that I do believe that Bitcoin is approaching a pretty interesting inflection point again, just like it did back in 2016 or 2012. When we come to these halvening moments, you do get a necessity for the price to adjust to compensate the miners for their effort of securing the network. And that is a natural progression in that we encode, not we, Nakamoto, whoever he, she, they are, coded into Bitcoin the known monetary policy for 200 years. That's pretty awesome. So we know what's going to happen to the production and the sizing of the market every year for the next 120 some odd years. So that's exciting. I think it bodes well for the markets in 2020. And coming into 2019 in December, someone asked me, really tough year in 2018. What do you think about Bitcoin? I said, look, I think it'll be one of the best performing assets in the world in 2019. It has indeed been that. And no, we're not back to the all-time high, but the all-time high, I just thought was a temporal phenomenon then too. So focus on value. Don't worry about the daily price. Worry about accumulating the network. There was a great stat I read over the weekend that there are more Bitcoin wallets in the world today than there are Bitcoin. So that means mathematically that probably at some point in the future, we won't be talking about whole Bitcoins. We'll be talking about Satoshis in terms of ownership.
Well, Mark, it sounds like an inspiring vision to me, and you certainly have given me the hope in the future and when it seems. Mark, we could continue this conversation all day, but we'll leave it here for now. Mark Yusko, founder and CEO of Morgan Creek Capital, I want to thank you so much for coming on and sharing some of your insights on where the market's headed, what the drivers are, and what's pushing everything forward. Thanks so much for being with us. And in the meantime, stay with us at blocktv.com for all the latest in news and information. I'm westropp-evans. Thanks for watching.
For more news and updates, follow us on Twitter